Good evening, everyone. Greg McDermott with Cyber Trading University checking in, welcoming all of you to our short-term FX trading webinar. We're going to spend the next hour talking about all the advantages of trading foreign currency, adding foreign currency to your trading tool belt, and showing you a couple of ways we have to hopefully make a few bucks, hopefully help you get started. We're brought to you tonight by our friends at FXCM. We will talk at the end of the night about an FXCM trading education grant that they have provided that can open up a world of opportunity for FX trading. So we are going to get going. I am going to get through the stuff that is important, which is the legal stuff. The CTU risk disclaimer, you're probably all very familiar with it. If not, I'll leave it up there for a moment. Oops. About Cyber Trading University. CTU has been an educational trading institution since 1995. Cyber Trading University established itself as a leader, first by working directly with SOE's trading firms, teaching them to day trade. CTU was one of the first to establish itself as a quality stock market trading school. Each of our instructors, including myself, has a minimum of 6 years of actual trading experience before they begin to work with students. And over the past 14 years, we've taught thousands of students to be successful and profitable traders. The CTU headquarters are located in the heart of the trading world in New York. My slide, I earned my Master's of Applied Finance from Macquarie University while on a Rotary International Scholarship in Sydney, Australia in 1989. Bachelor's of BS in Financial Management from St. Joseph's University, 1987. I was a crude oil options trader at the New York Mercantile Exchange. I was the head options market maker for JAS Securities at the Philadelphia Stock Exchange. I managed the firm's portfolio risk for a team of 10 options floor traders at the Philex. While there, I was also a market maker in the Dell Computer crowd, which at the time was the busiest equity option traded in the United States. I also directed an off-floor trading unit for JAS Securities and was qualified by the International Securities Exchange, the ISE, as a DTR. Let's get to the question you've probably all asked yourself and thought, and probably the question that brought you to our webinar this evening. Why should you trade in the Forex market? Maybe you're an equity trader, maybe you're an options trader, and you're saying to yourself, why Forex, Greg? What's in it for me? Well, first and foremost, it is the largest financial market in the world. The volume that trades daily over the counter and on listed exchanges through over the counter and through brokers is many multiples, staggering multiples of the equity stocks that trade in the U.S. This one, I believe, is the hardest part for somebody who comes to us as an equity trader to get their hands around, because in the FX market, it's as easy to profit in down markets as up markets. Now, most of you come to us from equities, would imagine, and are conditioned. Someone used the term brainwashed. I wouldn't go that far, but you're conditioned to believe up is down, bad is good. Pardon me, up is good, down is bad. I can't even say it. I'm so upside down tonight. Up is good, down is bad. It's that mindset that down is bad and there's no money to be made on the down. Well, the truth is there is money to be made when markets move, and whether it moves up or moves down, the FX market is simply a matter of you opening up a trade, whether it be a buy or a sell of a currency pair, and executing that trade. Strategies that work to the upside can also work to the downside. It opens up a whole, call it the other half of your brain. The brain that's been locked into up is good, down is bad, is now opened up to the whole world of up and down. For example, right now, over the last, I don't know, say 10 days or so, could have been a little longer than that, the dollar versus the yen has been screaming to the upside. Trading today is, I don't know, last I saw traded as high as about, I don't know, 106 106.55, we'll call it 106.50 just for argument's sake, and that's up significantly from lows of about 101 probably about a month ago. So I mean 500 pips, gigantic move, and over the last 10 days probably moved 250 pips. Maybe we'll take a look at that when we look at the charts in a little bit. But at the same time, the pound versus the dollar has just been getting pummeled, just getting killed, down, down, down. There's been money to be made all the way down. It's traded as low. I think it may have gotten down to around 1.60. I don't know. I saw it about as low as 1.6070, something like that. So both of those, there was opportunity to make money. One clearly an up trade. We'll see it on the charts, and one clearly a down trade. The risk management tools. Part of the advantage of FX is that because the market opens on Sunday night, closes Friday, and is trades continuously around the clock, the charting packages and the price points really run relatively consistently and continuously. This allows you to have less gaps in the chart. You'll see a gap if we take a look at the pound dollar chart. There was a gap from Friday's close till Sunday's open, but there's only really one gap in the chart there. So it allows you to get access to good data, and with the analytical tools available at places like FXCM using their MetaTrader 4 platform, you can do analysis that, quite honestly, 20 years ago there were only a select group of people that had access to those kind of tools, and now they're very, very commonplace. The market manipulation and false data that may or may not exist in the equity market is really, really, it's not, almost impossible. Nothing's impossible, but almost impossible. Countries can cuff some data. I'm sure we could all look to the unemployment data the U.S. has been putting out recently, and maybe some of us would say that's been cuffed. But in general, because you're effectively trading one country against another in their currency, a lot more difficult to get all the parties together to keep things quiet or to put out false information. Margins available up to 100 to 1. I know FXCM will offer a 50 to 1 margin. They also offer trading with no commissions, and you can open up accounts that will trade micros. They'll trade a standard lot, which is 100,000. They will trade a mini lot, which is 10,000, and they'll even trade a micro lot, which is 1,000 units of currency, which allows you to trade your pips at about 10 cents a pip when you go down to micros. So regardless of your experience level, and you can also, which I really recommend, you can do it in a demo account to practice. So the ability to margin your account, trade with no commissions, great analytics, and open up a demo account. It's a fantastic opportunity when trading FX. The other thing you'll find is that any of you who have traded equities for a while, what do you think? 5,000 U.S. equities out there can get really confusing. Where the heck do you want to start with a universe that big? Well, when you're talking about currencies, there are only 6 major U.S. dollar currency pairs and only about 18 major world pairs that trade. So it breeds some familiarity as you watch the pairs trade. You get a feel for what's going on. If any of you have traded a specific, everyone seems to always have a favorite stock, and you watch that stock and you sort of get to know what it's doing. Well, the same thing can happen when you're trading currency pairs. I remember when I traded Dell Computer, you could just almost feel by watching the tape which way the stock was going to go. And why was that? Well, because I had just spent countless hours staring at the screens, over and over, just hours of staring at the screen. You get to understand it. Well, you get to focus on a smaller number of pairs. You can focus on just a few currency pairs and have plenty of trading opportunities throughout the day, wherever you are in the world. And that's, I think, another big advantage. You can trade when you want, morning, afternoon, or late night, whether you're in New York, Los Angeles, you're in Tokyo tonight, you're in Rome, or you're in London. Wherever you are, morning, noon, and night, there's opportunity for you to trade because the market's open 24 hours a day, 6 days a week. Opens up on Sunday evening, trades through to, in the Eastern U.S. time, and then closes about 4 p.m. Eastern time U.S. on Friday. You also could trade where you want. With the advent of technology, with smartphones and iPads, and I'm sure a bunch of you are trying to already line it up for your iPhone 6s and whatever new iPad they may have come out with. I didn't really even see the announcement today. I do know that they're coming out with the 6, but you can access the markets wherever you are. When I'm trading, I have my iPhone with me, and I prefer to be sitting at my laptop or my desktop and putting on trades. But if I have to leave, go out or whatever I have to do during the day, I can take my iPhone with me and I can see the markets. I can update trades. I can keep track. I can cancel, replace. I can put in new orders wherever I am. So in the old days, I mean, 10 years ago, if you wanted to be an FX trader, the reality was you had to find time where you would be, it was you and your desktop, probably a big old Dell desktop 10 years ago. And you were tied to that desktop with a slow internet connection, watching every tick. Well, now you have the freedom to put on trades and move away from your desktop, live your life while still trading currencies. And you also get to trade how you want. And I think it's one of the most important things people need to realize when they trade currencies. You have to find a trading style that fits your personality. Best done in a demo account. But I think that what I find is that there are people who look at trades and, maybe somebody who's a long-term trader. I have a friend over in India, and his name is Sunil, a great long-term trader. He probably was on this big giant move in the dollar yen. My guess is I'm sure he was. And my guess is he probably waited for that setup and may have ridden that trade and might still be in that long trade for hundreds of pips. So he might put a trade on and have it on for days, maybe a week or two. Could be longer, depending on what he sees. And I know other people. We have a guy in the office back at CTU, and I told him that we were going to start talking more, and this was a little while ago, talking more about trading more actively as an FX trader. And he's like, oh, Greg, thank God, because I couldn't sit there all day and not be clicking the buttons. And I'm sure some of you are like our guy back at CTU, or some of you are like my friend in India, and there's some people probably like me who find it fall a little bit more in the middle. Well, however you trade, you can use the charting packages, nude services to find out how opportunity presents itself for your trading style. If you're someone that needs to trade actively during the day and you're in the, say, the East Coast of the U.S., you're probably going to want to trade, either the late night Asian session or early morning for the European session, so you can be sitting at your desk. Because if you're an active, using 5-minute, 1-minute charts, it's something you really probably have to be sitting in front of your computer most of the time. But you move away, become more of a swing trader or a longer term trader, trading off of like 4-hour, 1 hour, and 15-minute charts. You can put trades on, set stops, set limits, and move away using technology. The big point here is there is no need to quit your job to become an FX trader, at least not yet. Hopefully someday it would be great if all of you could, if that was your goal or your dream, to do that. But for right now, you can fit this within your current schedule. It's funny, I have a podcast that I listen to, a comedian, and he's always talking about people with motors and people who want to go. And people will say like, well, I can't become an FX trader because like I'd have to quit my job. Well, no, you don't. If you want to do it, you can find the time to do it. And technology and places like FXCM and here at CTU, we can help you do that. Here's a look at the major foreign currency market hours. I touched on it a little bit earlier. All the times are U.S. Eastern U.S. time, but London opens about 3 a.m., closes around noon. New York about 8 a.m., closes about 5. Sydney is open now, open to about 2 a.m. Tokyo opens about 7 p.m. They opened about an hour ago and close about 4 a.m. So wherever you are in the globe, you're going to be able to catch a session and find some opportunity that can fit your trading style. We all know that when you need to find news in the U.S., what do people do? There's two answers. People say, well, Greg, I just go to CNBC, or Greg, I just go to Yahoo Finance. There are always two big ones that people talk about. Well, it's a little more difficult to find FX news you got to do a little bit of looking. You got to do a little bit of searching. Rarely do you find stuff that is in the news that then correlates to the impact of that news event on the currency that's noted or the currency pairs that are traded. So here's a quick look at some of the one of the places I like to use to find news about the economy and the currencies that we trade. I have no relationship with Forex Factory. It just happens to be a website that I like, www.forexfactory.com. And if you go there, you can see that they put out all the economic data that's due out. Usually they're out for a week at a time, available for all the countries around the world. So it also allows you to go a little bit deeper, and you can click on the detail icon and see, okay, we've got some news coming out. What's the news? What's the measurement? What's the usual effect? Is it something a red, something big, or yellow, something not very big? What time is the next release? When are the notes? What are the notes? Why do traders care? And what's happened in the past? So it's a little bit of an insight into what the news may bring. So just like you're familiar with, hey, we knew Apple was coming out today with the news with some new hardware. Well, we kind of as traders would have sort of a general feel, but quite honestly, if the Bank of Japan is making an interest rate announcement, we may or may not know what that means, and so we're not trading at a disadvantage. You can use a site like this to help you get there. You also, I like the fact that you can go look and see all the live traders that they have logged in. What is their current position? And as a trader, for example, if you looked at, I'm going to grab a pen here, start drawing. Pen color, hang on a second. I don't want the pink pen color, nothing wrong with pink. Purple's looked good recently when we've used the pen. For example, if you look down here and you look at what's the biggest lean of all the major currencies, if you look at this one, and this is an old one, but 70% of the people were short the pound at this point. And if you were looking to get long, you may think to yourself, I don't know, maybe I should think about it. For me, I like going against the grain. So the fact that everybody's leaning this way makes me, just my normal tendency is to want to lean the opposite way. So again, more information. And what you find is, as a trader, that you have to spend some time sort of developing your eye. And there are things that matter and things that don't. As a floor trader, I used to have to develop my ear rather than my eye, because you'd have a lot of information coming at you visually, but also there was lots of sound. And it's one of the hardest things I had to do to overcome when I stopped trading on the floor and you were trading, in the quiet of an office, was that I could tell by the voice that I heard and the level of the voice the importance of the order. And if I had one guy come screaming around the corner yelling at the top of his lungs, I knew that was, depending on who it was, an important trade. But you might hear another guy casually roll up to the desk and say, hey, how are the, and you could tell. So as you're trying to process information, and this sort of is more of that information. For yourself, you have to learn what's important to you, what's impactful to your trading. Some stuff is just noise. It doesn't affect you, it doesn't hit you, it doesn't work for you. And if it doesn't, move on and try to find indicators, try news services, try charting, whatever it does to get you the profitable trades that you need. Let's talk about charting, and in this particular case, charting to profit in short-term FX trading. Now, I apologize there that candlesticks coming up. We're going to talk about the candlestick charts. What are they? Candlesticks graphically represent 4 price points for each time frame, and what they show you is, at a glance, what's the opening price, what's the closing price, what's the high price, and what's the low price for any time frame. Now, we're going to talk about candlestick charts very generally and how I use them, but what I'm not going to talk to you about is, and there are people out there In fact, I think Price Headley may have just been on one of our calls. He's one of the guys, if you're someone who finds that the patterns that develop within the charts on candlesticks is something that your eye recognizes and it's a way that you can interpret data better, then you may want to look to one of those people. I use it for much more of a, I use it for visual, but I'm not necessarily looking for the pattern of the type of bars. I'm looking for the ability to use these to build charts. So here is a candlestick chart taken off my FXCM account, and you'll see the green bars are up, the red bars are down. I think I've got to zoom in here. Yes, I do. And what this shows us is, grab the pen again. Actually, you know, let me do this. Let me grab the arrow, and we will put, if you'll notice, this shows us on this green bar. Let me do this. Let me grab this and we'll show you what the arrow. Okay, the bottom arrow shows us right here where this underlying opened, and it's a green bar, so that means that the underlying then closed higher because the open is lower than the close if it went up. And then these little dot things that you've got right here, the little tips, is the absolute high and the absolute low of that particular period. So it gives you the open, the high, the low, and the close. Let me get rid of this, clear all these drawings. So this is what I'm getting. I'm giving you on this red bar, that's the high, this is the low, this level here is where we opened, and the bottom red of the bar is where we closed. The fat of the body is the distance between the open and the close. So you get to see visually real quickly, did I have a green bar or do I have a red bar? And your eye, my eye, picks up, you know, how many, let's go backwards one. You can see, you know, hey, I had a large green bar. You know, am I seeing a lot of green? Am I seeing a lot of red? Particularly somebody like me who just tends to look for where are we going to reverse to. Let me go back to this one. So I use these as the building block for my trading. I also have, and you can see on there, moving averages. And what is a moving average as an indicator? For some reason, I couldn't get this to show up. Okay, there we go. Moving average, a smooth line connecting the points on a chart calculated by a simple average of the prices for a specific period. You could have a 50-day or a 50-minute, or if it was a 4-hour chart, you'd have a 54-hour moving average, or a 20-day. They also can be seen as points of support and resistance. And I'm not sure why this is giving me such trouble. So here is a moving average, and you can see it in the chart. The green moving up goes yellow, green. Now it goes red. This is an add-on indicator that I use on my charts that gives me the visual representation of whether the last number of periods is moving to the upside or the downside. Also, the other thing you're going to use as you're building your toolbox for trading FX is support and resistance. What are they? A support area is an established area where buyers have demonstrated that they are very willing to buy. More buyers than sellers. It's the crux of supply and demand. Resistance, the opposite. An established area at which sellers have demonstrated they are very willing to sell. Now, these areas or bands can switch, can flip. An area of support that gets broken through then will become, from a chartist standpoint, or can be an area of resistance on a reversed move. These support and resistance areas are key technical analysis terms. We look at support, supply and demand, the equilibrium at these junctures. So when we hit these points, it's the true implementation of supply and demand. When supply or demand exhausts, you will see price reversals, and they're the basic building blocks of price structure. And what we find is that, and I'll be honest, way back in the day, seemingly the Stone Ages, and we used to have guys that did charts, and you would buy packages. You would buy, it was like a magazine, a big paper magazine. You would have to chart yourself, and to get a charting package was very, very expensive. And I'll be honest, a lot of people back then thought, it's just hocus pocus. It's voodoo. Nobody believed in it. Well, the reality is that it is a viable way to trade, and what has happened, part of it has become a self-fulfilling prophecy. On some charts, for example, the pound versus the dollar right now I wouldn't be surprised if it found its way down to the 160-ish level. 160.00. It's a big number. It's a figure. Those 00 numbers are always sort of magnets for trades. And what will happen is, in this case, I would guess if it gets down there, there will be buyers there simply because it's the number on the chart, and a lot of it is support because people believe it's support. Everybody believes there'll be buyers, so buyers show up. Now, at some point, the buyers, if there's a strong enough move against them, will get moved out. But if the chart shows a certain area is support or resistance, you can find support or resistance simply because, at least at first glance or the first run through, that's just where it should be. So if everybody believes it, it can be a bit of a self-fulfilling prophecy. We also have trend lines, which are key structure points. They're the key price structure points, are the basics for drawing trend lines. I'll show you that when I pop up the FXCM account. Pivot highs and lows can also be used, and support can fall into more of a zone or a range than necessarily an exact number. A lot of times you'll see an area that looks like support or resistance, and you may see it poke through and then have it go the other way. So you could say it technically went through your line of your trend line, but the reality is it didn't continue there, so the support or the resistance would have held. Let's talk about short-term FX trading. In my MetaTrader, this is one of the screens that I have, and it allows me to look at, in this case, 15-minute, 5-minute, and 1-minute charts for the euro yen, the pound dollar, the euro US, and the euro versus the pound. As a short-term trader, you really need to have a lot of information up in front of you, particularly if you're trading down in the 5 and the 1-minute charts. Those things move very, very quickly. MetaTrader allows you, which you can get through FXCM's brokerage, really fantastic trading and great indicators, allowing you to keep your screens up live and active, and even trade right through your screens. When you're trading actively, like we're looking at here, order types become critical. A lot of people don't understand their orders and can make mistakes. So we're going to go through that. So as you're entering orders, you're confident in what you're doing. My favorite type of order, particularly when I'm entering a trade, I'll use a buy or a sell, and I will wrap that trade around and OC it with an OCO. A one cancels the other trade. And what is an OCO? It's a combined order that is a stop and a limit. A limit order is an order to buy or sell at a specific price. A stop order is normally you'll think of it as a stop loss order, but you can have a stop order above, a buy stop or a sell stop above or below the market. Let's call it a stop loss. In that case, it would be, if you own the underlying, you would have you'd have a buy stop below, a sell stop below the market, which once the underlying trades at or below that level, your order becomes a market order and then immediately executes, getting you out of a trade, usually with a bit of a loss. But only one of those trades executes. The other cancels automatically. So this allows you to put a trade out, execute an opening trade, put out an OCO, and if you have to move away from your screens, you know that you're protected. Only one side of your trade is going to execute. It's really a great way to also manage active spot trades. When you get in those really, when you see a market that's running, you're trading on a 5-minute or 1-minute chart, you want to have the OCO out there because sometimes you just literally can't click fast enough to get your orders out of the way. And you may have a stop and a limit above and below the market, but they're not OCO, and it trades up to your target profit area. That executes, but you still have a stop loss below, and for some reason the market reverses, and before you can get the heck out of the way, you're now a buyer. You're now a seller in a market that's going against you, and it's really can be a very, very dicey way. So the OCO prevents you from making those mistakes. Trust me, everybody's made them, and this is a great way to prevent them. Another way I like to use these, particularly when I put a trade into profit, is a trailing stop. And what a trailing stop does is it allows you to set the distance between, let's say it's a buy. You have a sell stop that follows the movement of the market, and you can decide how long, what distance you want your stop to be. So let's just say, for example, we'll go to the next screen. You could say, hey, I want my stop to trail by 20 pips. And what that means is that wherever the current price of the underlying is, your buy stop in this example will stay 20 pips below. If the underlying moves up, your buy stop will ratchet up behind it, but if it moves back down, the underlying, your stop will not move. So what it allows you to do, particularly if you have a trade that's in profit, it allows you to let it, what I like to do is if I can get it into profit, I'll move my stop loss up to a trailing stop, put it a distance that keeps me in profit, and allow hopefully to get a bit more of a run without putting any of the profit that I've accumulated in the trade at risk. I like using these for profit trades. And again, in MetaTrader, I'm showing you this screenshot from FXCM's MetaTrader. You can set a stop from a minimum of 15 pips to whatever you'd like. I threw 200 up as an example, but I don't think you're going to have a lot of 200 pip trailing stops. Unless you're my friend Sunil, who might have a traded 200 pip trailing stop. He's over in India. This also allows you in MetaTrader to take advantage of technology, where if you look at this, the black line is the current price, and the two red lines are your limit and your stop order. You can touch the line to see exactly what would your profit be on this trade and how many pips would it be, and then it also would allow you to move it. I like to move my stops on the charts rather than putting an exact number in, because I like to see visually, like, where does it fit? Do I want it just above the stop, just below the stop? It becomes a little bit of art and a little bit of science, but the advantage of using FXCM's MetaTrader 4 is you can grab the trade that's open and just drag it to where you want it to be, up or down. You also can just right-click on your open trade and say, hey, do I want to modify this? Do I want to close this? Again, all through the graphic interface, really a very, very slick piece of software, something that 20 years ago would have been completely unthinkable and out of reach of almost anybody. Computing-wise, graphic-wise, you could never do it. Now it's very commonplace, and this is something you really want to see in your trading platforms. Now I'm going to jump out of the presentation, and I'm now going to share. I'll show you that later. Let's close this down. I'll show you that later. Let's take a look at, no, we don't need that. We don't need that. We need this. That's what we wanted. Okay, so everybody now should be able to see. Let me just double check, make sure there's no questions out there. I don't see any. So we have, this is a look at our FXCM. Again, they're the sponsors of tonight's. And we've got the pound dollar up here. Let's take a look at it. Currently trading at 161.33, a little bit of a bounce off that bottom, which we talked about. In fact, I put a trade out this morning with our Cyber Group. Let me see what that trade is. Yeah, we bought the pound dollar, trying to catch a little bit of the bottom, up a little bit of money. We bought it at 160.67. It's currently trading at 161.33. So we're up about 60 or 70 pips on this trade. You can see it on the daily. It might be a little bit easier to see the trade on our weekly, and trying to find. I got to find the open trade. I'm going to try my stop loss. I'm going to modify that order. My stop loss to, I'm going to move this up. I'm going to move my stop loss up to to entry, because I don't want to leave any money. I don't want to. Let's take it up to 80 so we have a profit, and then we hit modify order and modify the order. So now we've got 2 trades in, and we're guaranteed. We put ourselves in a position where we've got a little bit of profit on this trade. Let me take this out of here. What I want to show you are the indicators. Now we're going to let's look at this 4-hour chart, and there are 3 indicators on here. Free on MetaTrader. All you need to do is right-click and drop them in. We're going to talk about the AC, the accelerator oscillator, which is down here, the ADX, which is the bottom one, and then we're going to talk about fractals, which are these triangle arrowhead-looking pieces. And what we're going to find is that we've got the ability. If you look at this trade, let's start with the accelerator oscillator. It's a momentum indicator, graphically represented across a 0 line. And if you wanted to add this to your trade, simply go to MetaTrader, click on indicators, and you can just look for trend, and you can look for the accelerator oscillator. It's in here somewhere. There it is, accelerator oscillator. Click it, and it will drop it onto your chart for you. And what that tells you is what you're looking for buy and sell signals. And this is a 4-hour chart. Is you want to look for a crossover the 0, which we got here, and on this second bar you'd be looking for an opportunity to get in. That would be one of the buy indicators. The other one would be the same thing on the sell, and if you look here, we go backwards in time. Here we're on the red, it crosses over to negative red, and then on this bar we would be a seller, and quite honestly, we never really got up again. That trade was a 500 pip trade. Plus or minus. I'm not going to say we would have ridden it all, but that's what that indicator tells you. But what you'll also notice is that below the ADX, that is a crossover trade. Pardon me, nobody wanted to hear that sneeze. What you're looking for here is a divergence between the red, which is the negative, and the green, which is the positive. And if you look on this chart, not only did we hit this second bar down right here on the accelerator oscillator, but we crossed over and began to diverge on our ADX, both very, very negative. So, and then of course we had this move down. So what I'm seeing here is we might be getting ready down at the bottom to get a crossover to the positive for the ADX. We got already a little bit of a leading indicator here on the accelerator oscillator. So those two, and again, if you needed the ADX, you just simply take that, insert it, average directional movement index. I set this bar at 30 as my horizontal line, and what you're looking for is as big of divergence as possible. You can see that since this crossover right there, the negative has been in control, but now it looks like the positive might be turning over. So these 3 indicators, those 2 sort of give us a positive influence. And what I also want to show you is that the fractals, which will tick in a second, there you are. The other thing you want to see is with a fractal, which is right here, that is a directional indicator. And what that tells you is you're looking for, again, a reversal. And what that reversal should show you is that if within 3 to 5 bars, so we're on the 3rd bar after this fractal paints here, you cross over in the direction of the arrow, that would be an up indicator. So right now 161.53, about 20 pips above here. If we can get this bar or the subsequent 4-hour bar, or maybe even the next one, to paint over here, that would be a positive for our indicators. If you look here, let me find some. Like this one, this one never played out. This one, this negative here, 1, 2, 3, 4, 5, that really wouldn't have been an indicator. And what you have here are 3 indicators that give you directional input. Now, I don't like using them, the fractal low. I'll use them on a 15-minute chart occasionally, but I don't go any lower, even though you'll see them on my 5-minute chart. I kind of stay away from them. I will use them sometimes. But what I want to point out is that although, you know, if you look at the 1-hour chart, and this is the pound dollar, it's looking, the accelerator oscillator looking a little positive, not quite as positive on the ADX, and we are going to paint above. This fractal was 1, 2, 3, 4, 5. We painted above that fractal. It should be a positive now that we're going to close above that. So, and again, another positive indicator. But what I want to tell you is, and this is sort of a divergence from the text, the presentation. This is sort of my my insight into this. When you're using charts, one of the things you have to be careful of, and people will do this, is that the indicators might all show up, 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 but the chart doesn't necessarily know that it should be a buy or a sell. So what I mean by that is you need to make sure that you understand where are your support areas. We talked about that earlier. Where are your resistance areas? I talked about that earlier this morning when I talked to our team, and let me see if I can show you a little bit in time when we did that trade. This is, times always change on this thing. So what time does it say it is now? This says it says it's 3:30, which so 8 hours ago would have been about 1900. We were right about here. We were right in this area. No, we weren't. We were 19. We were right in this area here. And when we did that buy, and it was really kind of looked a little negative, but one of the reasons why I didn't want to necessarily sell it is because we knew that 16000 was a big deal. And even right here, if you look to the left here, this level of 160.65 is there's a bottom, a low here, a low here, a low here. We had a bunch of support over the last, this is a 15-minute chart, over the last, I don't know, 5, 6, 7 hours. Again, we're talking about when I was talking on our cyber group at noon, we had a significant amount of support. So if I'm selling this at 160, like right in here, although the indicators may have looked a little more negative then, maybe, the reason I wanted to look for an up move was, and kind of go away from some of those maybe indicators, was that I didn't see a lot of opportunity for this to go down because of the support. The chart was showing me that I had, and I'm going to make up a number, I had about 20, 15 maybe pips until I ran into all this support. And at the same time, I was in an area where my stops were either here or above, were some serious 50, 60 points away. So the chart showed me that I had a lousy stop area and I didn't have a lot of profit. So even though it may have looked negative by some of the indicators, I went a little deeper and used the charts. And my point is that you can't just blindly follow the indicators. You have to look and say, wow, this looks like a sell, but I'm 5 pips away from an area that has been really big support. Do I want to try to bang my head against that wall? And that only comes from experience. The chart doesn't know, the trend lines don't know that there are indicators giving you the thumbs up or the thumbs down. And what I'm saying is you want to use those indicators to put you in a mindset of which way you think the underlying is going. And then the first thing I look at is, okay, where's my stop? And then second, where's my profit? And is there anything between me and the profit? And so that's how you use these indicators in conjunction with the charting. Now I am going to close this one up, and I'm going to go back to our presentation. ADX from the current slide. ADX, we covered those the two trends and the fractals, all three available for free with your FXCM MetaTrader demo account. Let's also talk about, when you're talking about short-term trading, a lot of times people will look at a chart and their longer-term traders will say, hey, look at this 4-hour chart. Wow, man, nothing going on. There was no money to be made today over these last 12 hours. And you're like, yeah, graphically, you're like, yeah, not that much going on. But then you go a little deeper and you say, wow, that same time frame, here's a 1-hour chart. Wow, that's a little bit going on there. And then you say, well, wait a second, let's take it to the extreme. Here's a 5-minute chart. And if you look at this 5-minute chart and you dig down and find out, like, what did it really trade? If you look at this bottom down here, we're at 109.60, and this high here, 109.97. Now, that's 37 pips. Please understand me. I'm not telling you that I would have bought the bottom and sold the top. And anybody who tells you that, quite honestly, is lying to you. But what I'm telling you is there was opportunity to get long in here and maybe get out in here. And then when this thing turned around, this went from 109.97 all the way back down to about 109.60 again. And then it traded up again another 20 pips. And then if you look at it on a 1-minute chart, it gets even crazier. So there was a 1-minute chart. I mean, look at the movement that you had, the ups and the downs. So every time this thing moves and ticks, if you want to be a very, very short-term trader, there is opportunity. And what you have to remember, and this is that same time frame, I needed 2 charts to get it in. You can even take, for example, I'm not saying I do lots of 5-minute Fibonacci's, but if you put the Fibonacci on there, and you got to look a little closely because it's kind of light with the yellow, but when we went to our bottom, when it came off the bottom, we got a bit of a pause in the neighborhood right here around our 38.2, and then we went up again. We did go kind of through it, but we came right back into the 50 level. And then when we came back down, we traded back down, as you can see, down to the 23.6 and back to the 38.2. And I'm not telling you that you should be trading 5-minute Fibonacci's. I'm definitely not telling you that. But what I'm telling you is something a little bit more simple. You can apply the same trading strategies you've used for equities, for options, for futures to short-term FX trading. You can focus on shorter time frames, 15-minute charts, 5-minute charts, 1-minute charts. These really should be actively managed using tight stops, quick profit with OCO and trailing stops. The point is simple. Pips are pips. Making 100 pips on a 2-day trade is the same amount of money in your account as making 10 pips 10 times in 2 days. And what I really want you to think about is, how do you build your confidence and improve your eye for the pairs you trade using the demo accounts? I know guys that could never, ever, ever trade, like I said, my friend Sunil, who trades over in India, is a very, very long-term trader, and it just doesn't fit my personality. That would drive me nuts. And if he saw the way that I traded, he would, it would probably drive him a little crazy. But way back when we worked at the Philadelphia Stock Exchange, I had a very good friend who used to sit next to me when he sat on the desk, and I would be in the crowd sometimes, and I would be at the desk and kind of managing things. And I was famous for, he would say, yeah, Greg, I've got this opportunity and I like the chart here and I'm thinking at that. And I was doing 100 things at a time and I would be like, yeah, okay. And he'd be like, what did you just do? And I'd say, I just bought 2,000 shares. He's like, what are you doing? I was like, well, we got to stop in. We're okay. Let's see how it works out. And I was a little bit more of an active trader. He was very deliberate. And you have to figure out what trading style fits your personality. And then you have to go about trying to develop your eye for those kind of trades. People have asked me, they'll say, oh, like what do you see there? And I'll even find it when I'm talking about options, but even with the FX, and there are times where I'm not sure what I see, but I know what I see. Like I don't know why I see it, but some of it's just, you hear the term reps. If you've done it long enough, you sort of kind of get the feel, and you have to build that. And the way you should build it is with an FXCM demo account. That's the best way to build it. Or if you really got to have money on the table, go get a micro account where it costs you, 10 cents a pip, and you're not really putting any serious capital, at risk, because we don't want you to do that. Nobody would ask you to go out. You went to medical school. They wouldn't ask you to perform brain surgery the first day. They probably want you getting a little reps in before they put you on a body and crack the skull. So think about that the same way here. Also want to give you one more trade. In fact, I might even try, I'm going to show it to you on the charts and then on the PowerPoint, and then I may try to show it to you live, how it's played out recently and how it might be setting up again this week. But I like to call this the weekly closeout reversal trade. And what we're looking for is we want to find an actively traded pair that has made a strong move over the past week, up or down. I don't care. I just want movement. What we're looking for is traders who have made money naturally look to trade to take profits as the market moves towards the close. Now we see this normally, and I mention it coming up, but it's the same thing you would see at the end of a trading day. Market's been up big or down big, a stock's been up big or down big. You usually will see a bit of a reversal as the day closes out. Traders moving to close their positions, take profits, limit risk. The trade usually, if it sets up in the morning of the New York trading session on Fridays. Why Friday? Because Friday's the days the currency closes. That's why it's only available once a week, because we only close once a week. Now this is an example of a yen setup, and what you have here is the yen had moved up pretty strongly over. That's a really poor drawing, so I'll take it out and do it again. Apologize. Take two. Had moved up pretty strongly. This was our Friday trade. Now I got this, the red bars, down bars are Friday trade. And what you saw is that it went up from about a low here of 101.24 up to a high of it got to 104. In fact, it's an area that it just breached about 3 weeks ago. This is a little bit of an older chart. But what happened was this thing played back. It's the idea of, and it's the reality that most markets don't move just parabolically up. You're going to have ups and downs. It's the movement of the market, and you want to try to take advantage of the natural movement of the market. Now, if you look at this 4-hour trade, the market traded up in the morning and then just began to level off. It just kind of sat there. This is 4 hours. Just kind of sat there, kind of ran out of gas. And we're approaching the end of trading. And what you'll see is that we couldn't make any new highs. It started to roll over. And then we got to move down, giving back, 80 to 100 pips of the move that happened. I'm not telling you this is a slam dunk. I'm also not telling you that this happens every week. But what I am telling you is it does set up, and you should keep an eye out for it. Now here it is over a 1 hour, that same period. And you see we gradually came up and sort of ran out of gas. And you can see it was trading sideways. It couldn't go up. It couldn't go down. And once we took out these levels right here, that's a sell. That's a sell down there. And you're not looking for a gigantic move, but once it breaks 103.75 and then trades all the way down to 103.25, there's 20, 30, 40 pips. This is not a get-rich-quick scheme. This is not a retirement trade. This is one where, hey, I know that this is trading. I'm going to look for pairs that have moved up. I'm going to understand the movement of the market, and I'm going to try to take advantage of that and put a couple of dollars in my pocket as I move towards the end of my trading week. Here it is on a 15-minute in even more extreme detail. And then there's the 5-minute version. And of course, you always have to have the 1 minute just for fun. So this trade benefits from the natural ebb and flow of all trading markets. Markets go up and they go down. They go up a little, come back a little. Anybody's ever heard of the old ABC pattern? You know, moves from A up to the high point of B, moves back to C, and then goes back up. It's the old day trader ABC pattern. So you know that these things happen. So look beyond the numbers and look for the patterns. Develop your eye to see these. It's similar to the price reversal, as I mentioned earlier, that you'd see at the end of close for each equity trading day. This, again, should be tight stops managed with your really tight stops, and don't put a ton of money at risk. Okay, here's what we're going to do. I'm going to jump out of this presentation. Come on, let me get out of this. And I'm going to try to show you this setup as he tries to drop this down. Where'd FXCM go? Bring up MetaTrader. He says, hopefully. Now, this one might take us out because right now we might get reversal before, but it's the same idea. This is the pound dollar, the dollar pound, pardon me. I mean, this was 9.2, which was last Tuesday. For the last week, we were up at 1. I can't see this because this is over it. Move this over out of my way, as he sounds like he's talking to himself like a crazy person. 166.05, and it's trading down at 161.35. I mean, that's well, let's grab it and find out. That's, almost 500 pips. This isn't the end of the week, but reversal is natural. If we wanted to look where you may also see, if this thing continues down, let's say it, I don't know, let's say it maybe fills this gap, and we do have a gap on this chart, which is also a positive for an upside move. But let's look at the euro, the dollar versus the yen. And this is, looking at this daily chart, I mean, it's just been up, trading at 106.60. But this is in the last, during this week, we've gotten a that's a 100 pip move. If this thing would continue up, what you'd look for, again, it's only Tuesday. If this were to continue up, you would look for a bit of a give back. I think this one right here, that was the 30th, 31st, 1st, 2nd. Thought it was right here. This is another one where we played the give back. Let me think. I can't. Oh wait, I think we drew the line. No, but what you'll be doing is you'll be looking for the movement. Again, it's my natural tendency to want to go reverse anyway. But if at the end of a week, if you get the reversal, let me see. What's this one? The 21st, 22nd. Yeah. So here's one. It went from the 18th. Yeah, from the 18th, 19th, 20th, 21st. So this thing traded up about 160 pips. If you're watching where I'm drawing these lines, this is the 18th, the 19th, the 20th, the 21st, the 22nd, and then this 22nd, you had a bit of a give back. Not a huge one, but we did put in a high that day of 101.17, and it traded down to the end of, it closed down on the low at 103.53. So again, looking for the end of the week, looking for a give back, weekly reversal trade. Let me go to the PowerPoint. I do want to tell you about, I'd like you to take the opportunity tomorrow, and first thank you for being with us tonight. Call your educational advisor to talk about our Forex trading education. If you enroll with FXC in the FXCM grant with a deposit of $20, there's access to almost our entire FX trading class and workshop. Next ones are scheduled the middle to the end of the month, the 24th and 25th. I'll be doing those Lots of live. Let me see if I can get the screen that had. No, it was the other one. It was this one. There it is. I'll scroll through and show you what this is. So with the FXCM grant, you get live online workshops each month, phase 1, phase 2, and phase 3, recorded workshops, triple play workshops. You get access to all of our online recorded FX material. There's some other things in there. Please take the time tomorrow. Give a call to our trading advisors. They would be happy to show you how we can help you in particularly your FX trading. Let me put this up one more. So let me just throw this out. I appreciate everybody being with us again. I want you to reach out to our FXCM, our CTU educational advisors. Let me put up that website. Come on. Cyber Trading University. Make sure everybody's got the phone number. Come on. There it is. 877-70-CYBER. Please call and get some information. I appreciate everybody being with us this evening. This is Greg McDermott for Cyber Trading University signing off. Everybody have a great evening.